Okay, how to day trade the pound and the euro dollar on the 1 hour chart. First thing you're going to need is the closing prices, which is the white line, and that's just a line chart fattened up using the moving average and just picking your own thickness. This is a 1 period exponential, and this is going to give you the gestalt of it all. You can see the pattern very easily. You can see a triangle very easily. Well, maybe not. The colors on here, I'm trying to get so I can include everything on here without it being a big mess, which it typically is. And I have the 25 handles in here, which are this is 25, this is the 100, this is the 25, this is the 50. But actually this would be 75 pips, but I call it the 25 just because I'm only thinking in the difference in price. I'm not really thinking in terms of the it's about the price. The ATR over here is a little bit bigger. This can move easily 100 pips. So from here, this is 50, this is 100. So you can see these in any way you want, from the 25 to here being 50 and back to 25. The reason why I made the this the big, because that's just a round number, so psychologically it's more important. And there's 3 hits here over the period of 1 hour where there's a lot of trading done right in that window. And the 25 discount here where you can't quite get to the 100, big deal. Double bottom here. So if you're day trading this thing with the paint bars as your guide for short-term burst trends and the line chart for your triangle for this triple top, you break out, you're at the 50. So I think 50 pips is a big deal. And now you're sitting at the 50 again. So you have a double bottom at the 50. You're looking to go long coming into the next session. And of course, on the monthly, we're trying to march back to this horizontal line here. But that's probably not the most, well, I take into account every top and bottom on this. So the double bottom here, there's like an envelope. And this is where it spills out. But this trend is just turned up paint bar wise, but no sense in jumping in with both feet at this point because you still have to go through this possible pullback, which is coming back to this trend line here. So you have the trends up, and the last chance to get long, if you're going to do a wick breakout, which is late entry, better to get in here tight because you get the wonderful double top becomes a bottom right on the confluence point. People drawing these trend lines like this, different world, breakouts back in here. Same confluence point here, trend line is going to look like this. So I'm going with the rhythm method on this one, which is just this 4-hour price pulse, and here's the 1 hour, and there's the half hour. And for the people that are sitting on the 5-minute, you can see the last sellers came in here. The last sellers little starts to heat up, but they're trapping these people. If you look back to this last known flip zone where things flip over. So right now you got the buy stops here, and you got the buy limit starting right here at the 25, looking for a 25 pip bounce for your first winner. But just a series of orders in here, you know, just a trap. You have to have a labyrinth down here. Otherwise, you're just not going to survive it. You just can't survive these markets. Here you had a dump there. If you were even hoping for a rally, you'd sell there. But it's pretty whipsawed there on the 5. If you're waiting for the higher probability setups or the bigger pip probability setups, these are always good if you got a tight spread. But 1 hour chart, going to the euro on the left, pound on the right, and you put in, even during this crazy news here, you could have had a sell limit there just because of price alone, without regard to all these colors and zigzags. Because in the end, when it comes back, when it comes down to price, getting in other words, they buy this round number, they bid it up 25, 50 pips, almost 70, like 70-ish pips. Then it's too expensive, so it's the oscillation around this center point. We end up there. So it's just explosion up into here. This is good for 50 pip ride. Pretty amazing 50 pip ride, and here it's 75. Now it's a bigger ride on this side, selling into this with a limit, into this last known bottom with the blue in your favor. And here you bought, hopefully you got filled there, and you bought here, you're still long. But not to say we're not going to climax into this round, satisfy that big round number, and then come back, retest, go up, or just come all the way back to this one at some point. So whether we drift down there or whether we slam down there, that's the question. So the orders that last a real long time, looking to buy the apex of this last triangle, which is always a no-brainer setup. That happens all the time on all time frames. A retest of a triangle apex. Triangle being, here's another triangle. So we could come back to here again. We could come back into that. This could come all the way back to here, and then our scalps will get out here, and maybe some get out there to here. And if you're going to fractal entry, that's the fractal on close. Here's a triple. Here's a little drift. All getting a little quiet means the triangle is there. Quiet, you get the, if you have trailing buy stops, you're getting filled. Trailing buy stops get filled. A little late here, taking some risk, about 35 pips there, but you make it back and then some. If your last fill's here and you rode it to here, once they trap that last bull on the breakouts that people are looking at on, say, the 4-hour chart, just as they go to the 75 trap and the sell stops, if you had them trailing during this phase, so there's if you have trailing sell stops running, to actually reverse, not to protect any longs, all your long positions would be top becomes a bottom, top becomes a bottom, top becomes kind of a sloppy bottom there. Failure, you've already made quite a nice run there all day long. You come into Asia, a little cut back. When it drifts back there, you can see the unique oh jeez, here we go, unique hammer here. So if you buy stop sitting on top of this, So the quieter it gets, the more the buy stops you put in, and you just have tight exits because here is where they're going to trap you, whipsaw you on a stop entry. You're triggered. Say you get triggered somewhere in here, and then it comes back, stops you out. But having a buy limit at the no-brainer round number is always good for possible 25 pips, 12 pips stop. Another winner all the way back up to here. And then the inevitable retest, smash below the 100 minus 25 there. Never filled here, but this would have been the prime 50 pip entry. But it's always this would be your exit. So if you're getting in here, your exit's always going to be the last known low. So you can always see the terrain. Here's the doji looking forward, and that's right at the 25. So if you had bought that for a scalp, at least you made that, right? And market's constantly reprobing these areas, so you can go on the sell side or you can go on the buy side of it. You don't have to. You can put sells up here coming into tomorrow evening without any hesitation at the 50. It's just going to be, and all the 25 too. So you put a cluster of orders in there, tight stops, looking to get out here. Same thing here, you always are there, but probably more going to be like a buy trap down here. Just looking to buy anything right in there. Here too, coming back to here is anywhere down in here. I'm thinking if it does come down there, I want to be a buyer. But having all these orders set and tight enough stops so that should the market go like this, you can make money from it. So if the market ever does one of these jobs, which, I mean, doesn't this happen all the time? Even here, say the market starts to swoop down and you just start buying here. And you buy, you have a wide enough stop and you've got buy limits down here. If you capture this much of it without blowing up the account, your first exit's going to be here, and then your second's going to be at this, which it does take a little, there's a chance to unload and maybe let the rest ride until it goes and retests even this area. Now had you hung in there for all these hours, yeah, you finally got this drift up. So that was the first spike down where the bears take it, and then you retest that high almost, and but that's how I would do it. Just because when it's quiet like this during the triangle, your risk is reduced, and you can start putting in orders in here for a run this way, or if you think it's going this way. And it's always less risk because even if you're selling here and you get stopped out, you're just out. You could sell here at the 25 if you're really bearish. You get stopped out, but here you make it all back. You make 50 pips back here because it finally goes your way. Now, being out of sync with the market, as long as you can afford it, here even, of course, if you had tighter than a 25 pip stop on this sell, you didn't make your 25 pips. If you're trying to do break-even trading, which I don't think you want to do that, just because you're eventually going to get crushed. Unless you're so good, you're so right about your trades. But if you think it's a little difficult, it's definitely not good money management because you're always going to you're going to get killed sometime. You can make more money with a 8 pip stop down here to make 12 pips, where you know it's a high probability structure, not a high probability trade, because if you don't have if you're buying at the 50, your stops here, you're looking to make that. Ratio-wise, it looks great. Even a stop, same stop, hard stop. So if you're writing a script and you have terraced exits, so it's like you're actually buying in increments of like this, tight. Here's your master stop. But this one gets out as a scalp, this one gets out here, and this one gets out here. Of course, the issue is when the market appears to you as it's unfolding in front of you, which order do you put in and how's it go? I think you got to put them in manually here. Just place them one at a time, drop them, and don't buy until it hits here. So it gets stopped out here. Let it go into free fall to here. So staggered clusters, I would say, is the best way to go. This way, you take advantage of this for the scalp to here. You read all these trade plans in advance. The idea that you can't be that person to scalp and to swing trade is only because you don't have a. If you have a tight stop and a so here's your entry, here's your take profit. Well, they call that TP inside of MetaTrader, and this is your SL, stop losing, and here's your entry E. So at the 50-yard line with a 10 pip stop to make 20 pips. You can do that. 30, 40, 50 pips. All using a 10 pip hard stop. So if your stop's 10 pips to, I would say 20 should be your worst stop, because if you place a cluster like this with a 10 or the 15 pip stop like this, you're buying here and maybe get stopped out, but you're also buying all the way to the 50, 5 pips apart. You have orders all the way to 50. Maybe there's a 25 pip stop on this whole thing, or you have a tighter stop here. But it's really about getting this math here right. If this is a 15 stop, then this is going to be a 20, 25, 35. That's going to be the whole stop. But this is designed for this to get out here. This has got to get out here. And these have to get out in a magnitude that is larger than this whole stop range in total. So you have to imagine in advance the whole trade happening. 3 orders get tagged here. If you just trade onesies and you have a stop, they stopped you out. If you had a buy limit here and it didn't get filled and it was like the best trade in the world and you missed it. So I'm still never going to understand the guy that's trading 100K on one ticket. I'm never going to get it. Because if I was going to trade 100K in one ticket, I would put a cluster of 50K hand placed here. So I know I'm making money. If I put a standard lot order in here with a stop here, I just don't get it. I just... But see, that's when it comes down to, I think if you're trading so big, you don't care, right? This is like, yeah, I'm doing this, I'm doing that. You better be making it back on the other side though, right? A standard lot sell here, you know, what if you sold right here with a stop up here, right? Turn, even you sold here, you put your stop 40 pips up, they stop you out, you're down like 4 grand. Can you sell here again and ride that back psychologically? So it's all threshold of pain dollar wise. But it's also a threshold of pain ego-wise, because if you know you're right, and who doesn't know where this market's going, right? It's obvious this is going up. Do I buy here? Do I buy here? So if I buy here, how big can I go in? If I put my stop here and I'm like, oh, damned if they didn't take it back to the starting gate, and now it's going up. Here you got to buy limit. Here you got to buy, but it's, if you're going to watch what the market does do when it opens, if we come back to here and you get a little, but considering what time of day it is and when the news comes out, God, man, trade the news, right? If you say you don't trade the news, it's because somebody told you don't trade the news. So what the hell are they thinking? It's where all the money's at. So if you have a sell here during the news and you have a buy down here, like they bid it down before the news, they pop it up. I mean, come on. Come on, don't be ridiculous. Trade the market, Jesus Christ. Come on, people. Yeah, don't trade the news nonsense. Look at this thing. Bang. Look at this constant smacking off the 25. Yeah, it's going up. It's going up. Wedge. Wedge. Now we're looking to sell here. It's going to come back. It's going to go up. Just place your orders. Either side. Sell. Rally in a blue. Sell. Pull back into there. Rally in the blue. Sell. Sell. Buy. Buy. We're going to buy here. We're going to buy here. We're going to buy everywhere. Here, there, and everywhere. And that's just how it is. Buy and sell. Look at this, how important this price is. Wow, that's so crazy. And when they trap those, just by this much, you know, it's like about, 11 pips there. The spread might have got crazy right there. Can't see the ask. The ask might have been up here. So if you had a sell, stop. You can't see the ask here, but there's always something to consider when you're looking at these charts. Even if you have candles, there's no ask. Bid only. Look at that. Just amazing. Not a lot of pips here, but if you like pips, just go to the pound. That's a lot of pips, and go to the daily British pound and look at the same structure issue. Where's the stops? Here. Where do they take it to? There. And where do they take it up? Same thing. Sellers coming in here now. They take it back, but we're going to get in right there. This big wedge forming. It's going up. It's going up. Put in a major, so this is actually looking a little bit like the, here was your rally into blue for your sells. And there was your bottom, almost became a top. Big wedge forming. Buyers will come in here, got double bottom. This is forming, looking to break this. Come all the way back to here. First we got to get to here. First we got to get to there. But this is where everybody was long the pound. All the trend traders were on this one. Oh, it's a buy. Woof. But notice where we come back to. Doji. Doji retest. Again. Over and over again. But this is a sell now. Blue. It's very contradictory. It's a sell for these people. It's going to come up. They're looking for it to just keep tanking. So for weekly people, for the daily people, it would be Yep, come back to here. For the 4-hour people, it's like, oh boy, right about here. I think they want to get in. If the pound can make it back to here, although it looks pretty good here, better if we stop out this guy here. Get into it from that side of it. And it's the back to the euro on the 4-hour. This is got to come back a little bit, catch some more, get some more strength to get some fuel back here. Come back down here for another run up. But if it's really gonna be, if it's really off to the races, it's not gonna. So if it's off to the races, it's not gonna wait for anybody. It's just gonna go. Anyways, that's all I'm thinking about these two pairs. I guess you could go drive yourself crazy and look at some more pairs.